So you've obviously spent the last 9, 10 years building Gumroad. You've made a couple of angel investments along the way, but now we're going to dive kind of deeper into investing. One, maybe talk a little bit just about some of those angel investments you made, how they went, and then why focus on actually putting together a fund and going and kind of being more organized and serious about the investing activities.
Yeah. So I did just a little bit of angel investing previously, especially before Gumroad. I did 5 deals before Gumroad when I was at Pinterest. And that was really for me to build like a mental model of the industry, right? I was like, okay, I'm a founder. I'm an early employee. I was an early employee. I want to be a founder at some point. One great way to learn about this model is to basically take the money I didn't give USC and invest it into startups. So I did. I invested in 5 companies in 2011. 2 of them did quite well. HelloSign ended up selling to Dropbox for 230 million, and one, Movable Ink, is going to do something pretty well as well. And so I had just like from 5, I'd had two good hits, and so that was like, okay, I have some sensibility, some taste maybe here. And then I did my 6th deal was Lambda School. I did 2017 their seed round. That's also looks like it might be good. We'll see. Again, like you don't really know, right? It could be massive. It could go to zero. But that was an interesting bet. And then in 2019 and 2020, I did a bunch more, like 10 or 15, but it's been too early to really say what's going to work. But I did Figma, Clubhouse, House, the Aperitif brand, Circle, this new creator community thing, Squad, but just a bunch of small ones that are just so early to really know if they're going to work or not. But I had some sort of like some track record and like some interest in really learning about this kind of space, because it's fundamentally important. Like if you're interested in startups, like a lot of the startups do raise capital, they do raise money from VCs and angels, and there aren't that many people who are those people, and so like you can be a meaningful part of like business creation engine, if you participate in that. And so that's kind of how I thought about it. And then I did, after the George Floyd stuff, there was that meme going around about hire or wire. And I was like, I can do these. I can hire people. And I did, and will continue to do so. And I can also write checks. And so I just tweeted out, this is the power of Twitter. I just tweeted out, hey, I've done some of these investments. I'm looking for more. I'd love to invest in Black founders. And I did 4 deals from that and 2 others since indirectly. And basically I just ran out of money. Like I don't have Pinterest stock. I'm not, I still pay myself like a salary. I haven't sort of exited any liquidity on the Gumroad stock side. So it's not like I have a ton of money. But I did a few deals and some of them were looking for more money. So I emailed a few friends, including Naval. I was like, hey, I did a couple deals. Do you want to co-invest in these? They're looking for more money. And he effectively just says, I'd love to just give you money and then you can just choose where you want to invest it and I'll pay you to do that and help you sort of advise you on that. So let me know if you're interested. Like we have this new product at AngelList called Rolling Funds, sort of like lowers the barrier of entry as a fund manager. You can sort of try it out, ping a few friends. I'll anchor you. You can start at like $100,000 a quarter, do a couple deals a quarter, and then, see how it goes. And you can use Twitter, you can do whatever you want because it's kind of this new model. It's a little different than how it's been done in the past. And I was like, oh, this is interesting. Like, I'm not going to be a full-time VC. I don't want to deal with any of that stuff. And I don't have the time. I don't want to go on like this road show for months, or Zoom show now. And, but I can send some emails and these things, right? So I talked to AngelList, set up like a little rolling fund and, put together a brief memo on Notion that just sort of like my track record, who I am, like what I'm interested in, my little fund strategy, and just sent it out to 50 or 100 people, did a webinar about it, a couple tweets, and now I have over $1 million a quarter committed. So it's a sizable fund. It'll be a $4 million a year fund or something like that, which, if you have a normal fund with all these different things, that's sort of the equivalent of like a $12 million, $20 million fund, depending on how much you allocate for follow-ons and XYZ.
Walk us through the math. I know you've done the math in terms of like how that works, but walk us through like if you raised a $40 million fund previously, like we were talking earlier, walk through the math of how that works.
Yeah, I mean, I was kind of mind blown because even though I'd raised money from VCs and things and been an angel, like I never really knew what are the economics of a VC, right? And so I was like, $40 million fund. That is, first of all, you're not investing the 40 million. You typically take a 2% management fee over 10 years. So that's 20% gone. So you're really investing $32 million. Then typically half of that or 2/3 of that is often reserved for follow-on capital for this sort of the first rounds of these companies, their second and third, et cetera, rounds. Typically it's pretty common at 1 to 1 or 1 to 2 ratio. So let's be conservative. Let's say 1 to 1. So that's half the capital. So 16 million is going into early stage first rounds of these companies. And then that's over many years often, right? So that might be over 3 years typically, right? 3 to 5 years or something like that for a fund of that size. So really that $16 million is split over 3 years. It's around $5 million a year, right? So this $40 million fund that I see this big announcement, I'm like, wow, I would never do that. That's insanely massive. And like, they're probably so wealthy and making all this money and they can do all these deals, and I'm like, wait, that's like $5.5 million bucks, or 5.333 million a year into new companies. Like that's a very different, like 5 to 40. That's a huge difference, right? And so I just started doing the math, and I was like, wow, like I can, with the rolling fund, which like dramatically makes it easier for me to do this, and because of Twitter and the sort of direct to sort of invest LP kind of relationship I can have with everybody. Because that's kind of my shtick. Like I can raise a fund that's, probably on the size of a lot of these early stage funds, but it's part-time for me. And I don't have any overhead, right? 100% of my management fee, I'm just putting back into the fund as LP capital. So, of the 4.4 or whatever I'm at now per year, like, basically besides AngelList's fees, that's all going to go to companies. So over $4 million will go straight to the companies. And that's it. Right? Like it just keeps the model incredibly simple. You don't have to do any math on like any costs to the fund in terms of like dinners or employees or associates or an office space or any of that stuff. Like I don't need any of that, right? Like all I need is some money goes into an AngelList bank account, and then I talk to companies and say, hey, can I give you money? And then if they say yes, I just, do a CC, and then the deal gets done. And I think that is going to be really interesting over the next few years, like kind of being early. That same idea, I just like when I discovered this and I talked to Naval about it, I was like, this is really interesting. And like, I totally imagine in 5 years, there are going to be hundreds of these people like what I'm doing now who are having these rolling funds, able to collect, commits on a quarterly basis, able to do it publicly, raise anytime, raise anywhere. And like I wonder what that does to like the sort of traditional Sandhill Road. Clearly Sandhill Road's out of commission right now with COVID, right? But like I wonder if like this is just the end of it, right? Like why would you need to? If you can just raise from all these people, you can do it over Zoom. No founder wants to raise money, right? Like even if you want to go down the VC route, it's a necessary evil still, right? And so I just think if you can get coalitions of these founders, operators, people who actually understand sort of what it is to be a founder or have some domain expertise. I just think that the sort of the career VC, again, like it's a curve. It's not like a binary instance. It's on its way out. It's been on its way out for a long time. You saw this with syndicates. You saw this with super angels. You saw this now with rolling funds. My guess is over time, the sort of traditional partnership model is going to go away. And you see it in politics, right? Like I think politics is a really interesting analogy because you have Bernie Sanders and Trump who basically can raise directly from people. They don't have, their teams are tiny. They have incredibly low overhead. They're super scalable, and they can use it as a marketing thing. Like I don't have to do super PACs. I don't have to have dinners with rich people behind closed doors every 2 years, which is what VCs do, right? Like that's what VCs have, this like 2-year fundraising kind of process. They talk to all these rich people, that I still don't know most of their names. Like people have been like, oh, you should, and I'm like, oh, cool. I didn't even know that there are all these people out here. A lot of them, they're like family offices. A lot of them are in like China. Like the money, it's not as like sort of like a bunch of tech people giving other tech people money. There's a lot more happening that I've sort of started learning about. But a lot of them have access rights. So like, if some family office writes you a $10 million check into your fund to anchor you, like you're going to have to, give them updates, right? You're going to have to kind of give them some things, have a call with them once a month, which is actually not that dissimilar probably from politics, right? Like there's probably some soft commitment that if you bundle and you get, you give the, the Clinton campaign or the Biden campaign or the Trump campaign or whatever, like $1 million, they're going to pick up the phone call, right? And so there's like interesting to see that kind of play out. So my guess is just like in politics, you're going to see way more AOCs, way more Bernies, way more Trumps, right? I don't know if that's good or bad, like not a statement on that, it's just going to happen. Like that's what I believe. And that's the beauty of democracy. And like you're just going to get, people want democracy and they're going to get it, right? Inevitably. And I think the same thing will happen on the venture side, which, by the way, I think this whole conversation about diversity and inclusion, like a lot of founders, they raise from VCs, these VCs raise from LPs. These LPs look very, there's a path, right? That cuts through Harvard and Stanford. And I think if you can have all of these fund managers from all over the place, from all different backgrounds and all levels of domain expertise, all having these small funds, like that's just better for everybody. There's like more diverse LPs, more diverse founders, more diverse GPs, more diverse employees. Like I see this all the time. Like I'm a dude, I like started a company and like people will, like women will be like, it's weird that like this company I worked at like did this or didn't do that. And I was like, holy crap, I had no idea. I didn't even know that's a thing that women would want or not want or whatever. I just had so little context for it. Like tampons in the bathroom, like it's so cool. And I'm like, oh shit, that's a great idea. Like I wouldn't have thought of that. Obviously I was 21 at the time, a little different life experience now. So I know some of these things, but I just think it's so much better to just give people money to go solve the problems that they already know about than try to spend all this time, trying to like learn about this thing. It's like, no, I'd just rather give you money and you can go solve it. Right. And I think the same thing with this sort of like the venture capital kind of community is like all these funds are trying to do all these things, but I really think the answer is to just like give people a bunch of money and then like they'll do it. They'll do a great job. They'll do a better job than you reading 10 books and a bunch of blog posts and then trying to solve the problem. Like that you just don't know. It's like I can talk about Indian culture. I've never lived in India, but like I just know it because I've learned, I've just grew up in that sort of environment, right? And just it doesn't matter how awesome you are, and like unless you have like a master's degree, you're just not going to know as much as I do because of all the little things I picked up. And it's kind of like that, right? And so I just believe so much in like a bunch of diverse LPs picking a bunch of diverse GPs, and those GPs picking a bunch of diverse founders, and those founders building companies that are just better at all of these other things, solving all of these different problems. And I'm super excited about it. Because I do think it's going to be like a really interesting trend that's going to lead to a lot of interesting companies in the next 5 to 10 years.